Yo, what's going on everybody? My name is Ryan and I'm a CPA, and thanks for joining me today. Welcome back to another edition of CPA Reacts, where I rudely comment on people around the internet and their terrible tax advice. I would love it if you would consider subscribing to my channel if you're new here, and if you're returning, thanks for joining me again. And also please be sure to give this video a like if you find it entertaining and at all useful or educational. All right, so the first, so some of these things I've taken off Facebook in various Facebook groups or Facebook posts. So the first one says, I'm looking to launch a small business set up as a single member LLC. If I open up a separate checking account for this business, does it need to be an actual business account, or can it be a separate personal checking account? Well, definitely, in my opinion, I think you should open up a business checking account that matches the name of your LLC, so that you are, fully compliant legally with operating your business as your business. If you operate it as a, through your personal checking account, well, that might be fine for like accounting purposes, maybe even for tax purposes, but for legal purposes, you're gonna get into some trouble here if anything happens in the future. So I would not mess around here. I would do everything as properly as you can, so that if any issues arise in the future, you won't have that much of a problem. All right, this next comment is actually from a post talking about a young child who's making a lot of money selling stuff on Amazon, I believe. And this person just writes, if she's under 18, she can't legally sign her tax return. And I don't know where these people get this shit, because children, the IRS, on the IRS's guidelines and the FAQs and stuff, children can sign their own tax return, and parents can sign their tax returns for them as well, but just because they're under 18 doesn't mean they can't sign it. Maybe they're thinking of like contracts or something, but to give like blanket advice like this, or just a statement that she's so sure that people under 18 can't sign their own tax return, is just bullshit. And this is the frustrating thing with, looking for tax advice on the internet, or any kind of advice, is you're gonna have people chime in with strong opinions and no knowledge at all. Okay, this next one. I have a new client that has an S Corp, and he showed about $55,000 on the P&L that was officer's compensation. So that's what we put the amount. He's trying to refinance his house this year, and the loan officer reached out to us and made us aware that he in fact never paid himself any W-2 wages. He suggested us amending the return to add the W-2 wages, but the client didn't pay himself that way. Okay, so too often we get requests from clients or requests from the clients' loan officers to change their tax returns in a certain way to make it more attractive to the underwriters for qualifying for a loan. And there's a couple of issues here. One, for this post specifically, if the owner didn't pay himself a W-2 salary, then that's how he operated his business, and he should not be amending returns and creating payroll tax forms to try to replicate the fact that he paid himself a W-2 salary. This is not truly what happened. So that's one issue there. The second issue there is manipulating tax documents or income documents in order to qualify for loans is actually mortgage fraud. And, I used to be shocked that lenders would suggest doing stuff like this, because they're in the business, they're in the mortgage industry, and they should know like this is fraud. But it's so common now that it's, it still kind of blows my mind actually that how common it is. And so you see this often where loan officers will request changes from tax preparers to make the tax return more attractive. And that's illegal, first of all. And to make up some shit like this where, creating W-2 wages out of nowhere, that's like illegal. That's a ton of work. That's going to cause the client a lot of problems in terms of late filing fees and penalties for their payroll tax forms. So this is just a terrible idea. If he doesn't qualify, then he doesn't qualify. Maybe it's not your time to refinance. So sorry, buddy. I think this is just a shitty thing to have to deal with. All right, and this last one is actually from a tax preparer group. which means a group of tax professionals. They're asking this question, which should tell you how scary this is. Which do you guys think is better, a tax credit or a tax deduction? Well, just from dollar for dollar standpoint, a tax credit is better because a tax credit reduces your actual tax liability, while a tax deduction reduces your taxable income, and then you'll be taxed on a lower income. So a tax deduction, let's say on a general basis, is probably worth a quarter of a tax credit dollar for dollar. Now, tax credits are more rare. There's just a few tax credit programs out there: child tax credit, earned income credit, various, energy credits, electric vehicle credits, that kind of thing. They're very specific to certain situations. So in terms of availability, you might find deductions are more available, they're more robust, more people can take advantage of them. But on a dollar for dollar basis, the credit is definitely better. And I also think it's just a silly question. If you're a tax professional, like, why the hell would you ask that? So yeah, gonna keep it short today. That's all I got. Thanks for joining me. Be sure to smash the like button if you found this video helpful or enjoyable. And also, if you're new here, please consider subscribing to my channel. That's all I got for today. I'll see you next time, and take care.
I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him